So let's talk about week one of this swing trading challenge. What's going on, guys? It's Ricky with TechBot Solutions. I hope that we're in your thumbs up, and do not forget to subscribe. So we kicked off last week our swing trading challenge, which talked about limiting our ability to trade for this swing trade, 4 trades per month, golden ratio, posting your full trade plan, posting your full verified trade, and of course, making sure that you're focused on quality trades. We use our risk to reward ratio calculator because, again, if you guys haven't downloaded this one already, feel free to send me a direct message right now on Instagram. You guys can message me with the word risk and I will send it right on over to you. The really great thing about this is that it lets you plan out your entry, exit, your stop loss. It calculates your risk to reward ratio, and then you put in how many shares you want to take, and then it shows you your profit potential and your potential for loss based off of your trade plan. Now, one of the things that I really wanted to highlight within this swing trade, and I'm going to keep this video super short and sweet, right? But if you've ever struggled with over trading poor quality setups, this is the whole point of the swing trading challenge, is to encourage you, to limit you. I mean, people complain about the PDT rule with 3-day trades within a 5 business day period. We're talking about 4 trades within a 1 month period, 4-week period. And guess what? Week one of the swing trading challenge, I did not take a trade that was for the swing trading challenge. Obviously, if you've been following me here on YouTube and during my live trading sessions with the LPP team, I'm still day trading. But when it comes down to this swing trading challenge, the trades that I'm posting in that I want to work with that 25 allocated capital, I have not taken a swing trade. And the reason why is my criteria is not met. So if we look at the past 5 days, again, this was Friday's performance, this was Thursday, this was Wednesday's, this was Tuesday, and this was Monday. So now we've gapped up on the overall NASDAQ market. And again, this is 100% my opinion, but I'm going to be sharing with you the trade plan. And this is exactly how it would work. So I see a potential pullback on NASDAQ. Again, this does not have to happen, and I will not take the trade until I have confirmation. But if we do get confirmation of the NASDAQ market trading below the EMA and beginning to make progress right back down to the moving average, then there's pullback potential. But fortunately, because of an inverse ETF, I do not have to short QQQ, right? The inverse ETF of QQQ is SQQQ, and it does 3 times of whatever the NASDAQ market does. So once I get confirmation of this thing showing signs of progress above the EMA, working towards that moving average, it offers about 5.7% of potential profit. Again, it's not a home run trade. It's not a crazy, oh my God, like a crazy trade, but it's a very simple trade with a very simple setup of just trading a reversal. It's a ETF and an index that I follow very carefully, which is the NASDAQ market, and I like to become familiar with when it becomes overbought, when it begins to hint on a reversal, when it pulls on back, when it becomes overbought, hints on reversal, pulls on back. And again, there's times like this most recent time that it was testing the EMA line, it hinted on a pullback, but we never got the break below. And this is why it's so important to wait for confirmation. So now we are a little bit more on the overbought side, and I'm waiting to see, is this week 2, going to be the week that, again, we get confirmation that we break below the EMA line and begin to indicate signs of progress. And how exactly would I set up my trade plan? Well, let's go ahead and pull up SQQQ, and I want to share it with you guys. So if we pull up SQQQ, again, the very simple question to first ask myself is, okay, well, where exactly do I want to enter this trade? And when I pull it up here, I can see that, okay, well, I'm going to want to wait for confirmation, and that's at least at $10 per share, right? And then my potential exit is going to be right below that moving average, and the moving average is at 1061, as you can see right on over there. So I'm probably going to want to take profits or lock in profits, let's say more realistically, right around 1050 per share, right? So where would I potentially cut losses? Well, if it breaks back above $10, but then there's a break of pattern and it breaks back below EMA, then I'm going to want to manage my risk there. And I can manage my risk at, $9.90, giving myself some wiggle room, but again, something that doesn't completely put me in the red and something that I cannot tolerate. And then when calculating this, we just go ahead and drag this down. This tells us our risk to reward ratio is a 5-to-1 ratio, which meets my criteria. And then I can quickly determine, okay, well, with how many shares do I want to approach this? I believe with 3,500 shares. Let me go ahead and double check. I'm not too sure if it's 3,500 or 350. So yeah, definitely not going to be this one. So let's go ahead and do 2,500, and that's going to tell me that that's going to be right around $25,000. So $25,000 with an average purchase price of $10 per share. Take profits at 1050, cut losses at 990. What exactly would this look like for my profit potential and my loss potential? I could potentially make $1,200. I could potentially lose $250. Very, very simple. And the really great thing about this, the reason I love this risk calculator is that the whole point is to be planning out your trade before you actually take it. So you could see not just only how much money you could potentially make, but also how much money you could potentially lose. So if the money that you could potentially lose is something more than you can tolerate, then guess what? You're able to plan that out, see it before you actually take the trade, and then realize, hey, that's not actually a trade that I want to take because that risk or that loss is not something that I want to put myself through. And that is 100% okay. But again, I just want to share one of the focuses that I had this week when it came down to the overall NASDAQ market, looking a little bit more on the overbought side. The other one that I'm also paying attention to, is Hood. Hood is a little bit more on the overbought side. The only thing with this is that it has been extremely bullish, so I don't know if I completely want to short this. But Snapchat, on the other hand, has been showing more signs of a resistance, and if we do get confirmation of this thing breaking below the EMA line, then I could see myself entering a swing trade, shorting Snapchat as it makes its way back down to the moving average. And that one would offer a much greater percent ROI, but obviously comes at a much greater form of risk. This thing would offer a 16.3% risk to reward ratio if we get confirmation and if we make our way back down to the moving average. And if you look back to my overall trade plan, again, my goal for the whole swing trading challenge is literally only 10%. So within 4 weeks, 10%, I wanted to set more of a realistic goal, something to not push someone to uncomfortable levels, but to also remind you that, again, you don't have to trade every week to hit that 10% target. And especially for complete beginners, I feel like this is a good reminder to have, especially when you're just getting started. So again, for all of our LPP members, we do have a swing trading tab within our LPP Discord. So feel free to check it out. I also do have a free video on YouTube that breaks down the swing trading challenge if you want to learn more about it and how to partake in it. So I hope to see you for our live trading session on Monday. If you want to tune on in, it's the second link in the description down below. And if you have any questions, feel free to comment down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.